Welcome back to Forex Market Insights, your go-to podcast for expert analysis and actionable strategies. Today is March 21st, 2025, and we're diving into everything that moved the currency markets today and what's ahead for the next trading session. If you're serious about trading, you won't want to miss this breakdown. Let's start with today's major market movers. Market recap, March 21st, 2025. It was a volatile session across the board. The US dollar showed strength early on but faced some pullbacks as traders digested key economic data. The DXY, which measures the dollar against a basket of major currencies, hovered around the 104.80 mark, after touching an intraday high of 105.20. Key developments today: Federal Reserve commentary. A top Fed official signaled that inflation is still a concern, pushing rate cut expectations further down the road. This initially lifted the dollar but later led to a mixed reaction in risk assets. U.S. jobless claims. The latest report came in slightly better than expected at 214K versus 220K forecast, indicating a still resilient labor market. Eurozone PMI data. The euro took a hit after manufacturing PMI came in at 48.7, below expectations and reinforcing recession worries in the region. BOJ intervention rumors. The Japanese yen saw sharp swings as speculation grew that the Bank of Japan may step in to curb excessive yen weakness. US dollar to Japanese yen spiked above 151.20 before settling lower. Gold and oil. Gold surged past $2,180 per ounce as geopolitical tensions remained elevated. Meanwhile, oil prices climbed toward $82 per barrel, with supply concerns keeping traders on edge. Major currency pair performance. Euro to US dollar. The euro struggled to gain ground, closing near 1.0810 after weak European data. The pair failed to break 1.0850, signaling bearish sentiment may continue unless the dollar weakens. Watch for any shift in Fed rhetoric that could impact the pair next session. Pound sterling to US dollar. The pound was resilient despite a stronger dollar, ending the day around 1.2665. The Bank of England remains cautious, but traders are eyeing inflation trends for future rate guidance. US dollar to Japanese yen. Dollar-yen volatility was off the charts today. The pair tested highs above 151.20 before retreating. Traders remain on high alert for any intervention from Japanese authorities. Australian dollar to US dollar. The Aussie dollar slipped toward 0.6560, weighed down by a risk-off sentiment and weaker commodity demand. Australia's CPI data next week will be key for direction. US dollar to Canadian dollar. The Canadian dollar weakened as oil prices failed to provide much support. The pair ended the session near 1.3575. Next week's GDP data from Canada could bring more clarity. Forecast for the next workday, March 24th, 2025. Key events to watch. U.S. durable goods orders. A strong report could reinforce the Fed's higher-for-longer stance on rates. ECB President speech. Any hints on future policy could impact euro to US dollar. Japan inflation data. This will be critical for US dollar to Japanese yen traders, especially amid BOJ speculation. Commodity market trends. Oil and gold continue to play a crucial role in FX movement, particularly for CAD and AUD. Trading levels to watch. Euro to US dollar. Resistance at 1.0850. Support at 1.0780. Pound sterling to US dollar. Resistance at 1.2700. Support at 1.2630. US dollar to Japanese yen. Resistance at 151.50, support at 150.50. Australian dollar to US dollar. Resistance at 0.6600, support at 0.6525. US dollar to Canadian dollar. Resistance at 1.3600, support at 1.3540. As we head into the next session, traders should remain cautious of volatility spikes, central bank commentary, and key economic releases. Market sentiment is still fragile, and one unexpected event could trigger sharp moves across pairs. If you found today's breakdown helpful, don't forget to subscribe and leave a review. We'll be back with more insights to keep you ahead of the game. Thanks for tuning in to Forex Market Insights. Happy trading, and we'll see you in the next episode.